Sorry. Hi. I would also like to take a second for the other two panelists to introduce themselves. Alex, you want to go first?
Sure. I'm Alexei. I'm the co-founder of Ob. We're building a Bitcoin layer 2 that provides unified access to Bitcoin staking and access to DeFi. We have over 500,000 users getting over 200 million deposits. And previously, I was doing a lot of research in bridging, roll-ups for the last 10 years, both India and
My name is Ted Bowles. I'm the CEO and founder of Orange Wheel. It's a strategic advisory that supports businesses in understanding this monetary transition towards Bitcoin. My background is corporate strategy and management consulting with the Boston Consulting Group. I also worked here in Vienna with Canada building a strategy team through the hypergrowth phase of 2020-2022.
Thank you very much. So then I will start the questions, and my first question is, does Bitcoin really act as a digital gold for institutions and also for everyone? Or is it more like a source of investment, or how do you see this all has?
I would start. I think, from my perspective, and I've honestly been more on the non-institutional side for the last 10 years, what I find very interesting is the transition from, everybody, institutions, banks being fighting against Bitcoin. We had a lot of, steering campaigns in terms of energy efficiency. And suddenly, you have ETFs and then the banks just selling Bitcoin to my grandmother. I think, if you zoom out, I do believe that Bitcoin has achieved the status of store value for many institutions. Specifically, if you observe the trajectory of Bitcoin in the last 10 years. And, these treasury companies, they invest into Bitcoin with the intention to hold this for a long time. So even short-term volatility, as we still obviously see it, I think is accounted for. And the more institutional option you see, the less volatility you will experience. Of course, buying this gets hacked or situation moves its points, there's always a risk here. So I'd still say it's much more risky, I think, for institutions than gold, which is why we're only seeing this option now. But I think we've moved past this short-term speculation among institutional players, and that has shifted to other assets because there's plenty of them in the space.
Actually, I can be very comfortable with the narrative like Bitcoin as digital gold. So I see the Bitcoin at the moment as a solution to this problem of store value, as I showed in my presentation. And if you look how it behaves now, it can even be in the midterm, not just the long term, but even in midterm to a little bit longer term, be most probably speculative, but it can be a hedge against debasement. Inflation anyway, on the placement, but maybe even against the debasement. This was basically the main idea that Michael Saylor had with MicroStrategy when he was looking at his cash or at the money in his treasury. And he thought about like, what if I'm looking outside, I see a 15% debasement per year. I have to do something. And for him, the solution was Bitcoin. And up until now, it worked.
Yeah, for me, it's like I can only look at the similarities. So like you look at the limited quantities. It's even more limited for Bitcoin. So we can find more gold and we're gonna discover more. So it's even better. And also, it's adopted as a reserve. So it proved the theory that it can be a reserve. And that's something which is also very important. Like gold was recognized. So if Bitcoin is recognized, and it's recognized because you can move it very quickly, which is not the case of the gold. And you can also have a proof of reserve, which is even better than the gold, because only the government that you that they have the gold. So the similarities and the evolution of the tool make it very likely that it might replace the gold at midterm also, I think.
Yeah, I see it personally with what Jim said. Like, I think the properties of Bitcoin have always been there, which is a superior sort of money, both sort of value, but also the other characteristics. The only variable as you go through transition is the rate of recognition of that fact amongst investors, corporations, individual people. So that's where you see both the opportunity and risk. The risk in the form of volatility, the speculative nature as you kind of monetize that asset. But also the outside opportunity for those that recognize sooner than others are participating in that benefit of increasing their relative wealth by getting a larger share of the network. And I think the other aspect is people building on layers, use their station, making more functionality for people. So those are the two things that are changing through time, but the properties of Bitcoin are already there, which made it in the state usable, yes, but it will, I believe, move it to a other forms of here without making a change that others.
Yeah, and also a lot of pension funds are looking into accepting, like investing into Bitcoin, which is usually a very long-term investment, like 20, 30, 40 years, right? And it's more also government funds are investing into Bitcoin. Like now, the very famous speaker for Abu Dhabi Commonwealth Fund invested 400 million. So it, especially with ETFs, it's becoming more and more adopted. Like about half of all the big investment funds, the biggest in the world, have somehow investment into Bitcoin through ETFs mainly. So continuing on that, how do you see the differences between treating Bitcoin as a strategic reserve versus speculation or opportunistic investment? Sorry.
Should we want to start with STEM? Sure. Yeah, I'll be relatively quick. I think. I think all the different market participants have their own opinions. I think they tend to go through this kind of transgression where they begin seeing it as a set of investment, and over time they get to that endpoint, which is Bitcoin is not a trade, it's not a get out, it's the endpoint. It is the future of money, and something like when Sailor, they say, let's just fast forward to the end. Let's get as much as you can right now, right? And hence the Bitcoin Treasury company model that kind of be replicated. But I do think that everybody, all along, have those stewards, and investors will kind of have to go through their own journey to get to that endpoint. And some will be in the trading phase for a while and use it as speculation. Others will see it as a hedge, and then that dynamic is kind of a bit of a one-way street that we're all kind of moving towards.
Yeah. For my, I have a narrow vision of the ETF, but for what I see, if I look at the perspective of the banks, so they are the one marketing the ETF, and they don't take commission out of it. So it means, okay, let's do something where some people that don't know blockchain, they don't know MetaMask, they don't want to use let's do it in the stock market, it's gonna be easier. And they're gonna buy it, they're gonna take commission. So it's good. So I think it's good business, and for us it's a good adoption. And I think it's a long-term perspective for the people that invested. They're probably a lot of trading, but in the long term, it's more adoption of the retail markets based on the game because it's more simple for them and they see it's safe. I don't know for that, but at least that's the way it's the bank wants to do business. They have been allowed to do business. They are into the business.
Okay, I see that if you look at the different market participants, they have different perspectives, they have different needs, they have different problems to solve. If we're talking about like sovereign funds, sovereign funds and the like, for me, even from a financial market theory's perspective, diversification is always favorable. So if you just take this point, you already have diversification. And but if you look at companies, really normal operative companies, it's another question. The question there is also from a financial market theory perspective. It's always, should a company do other things than what the company should do, basically like on operative part. And so now it's a little bit now, in the last few months or years, it has come that they should also take more look on the investment side, like the treasury side. I'm not sure about this. Maybe usual individuals have better understanding of what they need, and I'm not sure if companies should do that, or most of the companies on a operative companies should do have also to pick a treasury. I'm not sure about that because this is what individuals can do very easily. Maybe it's another thing that if you look at these kind of treasury companies, which are especially for Bitcoin and working with debt and some other derivatives and financial constructions, maybe they have even an interesting point for individuals to invest in these kind of companies.
I mean, I think most of this is already covered, but the fact that we have ETFs, the fact that we have these some type of treasury companies just shows that there is a demand for long-term investments. We've had trading for a decade, right, as a speculative asset. What I will say is that I personally see ETFs, treasury companies, it's basically a bridge to just, bridge the gap between, the perhaps less competitive generation right now and like not so competitive investment managers. For them, this is a regulatory vehicle to invest into Bitcoin. But I think for the next 10 to 20 years, we'll see a lot of them move to self-custody as expertise in self-custody grows, as normal companies just become comfortable with just buying Bitcoin directly, and as the regulatory rules are established. So for instance, right now, like treasury companies are things that's going to be around for a few years, maybe 10 years, 5 years, but eventually people will just transition to buying the asset themselves.
Great answer. And from the risk aversive side, as we famously know, MicroStrategy is very taking a lot of that, right? It raises money from investors and buying it purely to buy more Bitcoin on leverage. How do you see from the risk versus this approach versus to put a smaller allocation from your from the strategic part into Bitcoin and crypto overall, not only Bitcoin, right?
Well, I mean, I do think it's quite the risky bet, right? I mean, Michael said it's going all in, but I do think like get access to cheap cash in that sense, and the older investors will still align with the vision. And he's become a part of a pop culture, pop figure in the Bitcoin space, which I think if you're the first doing that, you get a lot of attention, and it works well for a while. I think people get really excited. But leverage is always risky, and I've been in the business space for a while, and every 2 to 3 years something happens, right? I hope it's not strategy that starts unwinding next. I mean, it takes some time for it, but it can always happen, right? Like the more companies do that, the bigger the risk becomes. So if you're not a business that is only in crypto, I would love to that, and I would rather just diversify a bit. I agree on that as a company or a different focus business, and we don't, do these. It's because it's just, it's not necessarily farming products.
Yeah, my understanding, MicroStrategy is doing quite in a sophisticated way. He was the first big one going publicly in this one. And it's not just that he's just that buys Bitcoin with it. He basically has this operative company, he has operative cash flow. With this one, with this operating cash flow, we can pay interest on the debts. And it's not just like one debt or one type of debt. He does a lot of different kind of financial structures. He also structures it, for example, for some of the retirees in the United States. So it's also regulatory wise. It's interesting for some kind of people, for some kind of investor or retirees, and he does a lot of different debts. So I can imagine that this, even in the mid and long term, works well, even because they're still innovative and working on it. I'm not so sure about this. Lots of other now different treasuries copy this kind of MicroStrategy. If this works also out, or if we will see that this will be maybe one of the reasons why we have the next Bitcoin crash or some similar downturn in a short period of time. Let's see what happens here.
I agree with Marco. There's like different type of tools. So, we have been analyzing some tools. So, it really depends the risk you're taking. You're taking either you're all in. That when people say, "Oh, strategy that went all in," that you already. I think the first board was like two, 250 million. So it was already like a pile of cash he had in hand. So people that are not taking like very serious risks about leverage will survive. And they're gonna be like scandals for sure. And people that don't have to be going to kind of stuff. But that I agree that there are gonna be some of those and there's gonna be like a bankruptcy of companies that are not having any profit because if you are reasonable, you don't want to do yield on Bitcoin because it's risky. You don't want to do anything with your Bitcoin. So it's just cost. It costs. It's trying to buy an asset. So you're raising money to buy an asset. Then you pay commission to agent to stuff. So it's just cost. For us, it's cost. So you need to have profit in parallel. Otherwise, it's not going to work. And if the Bitcoin is down, and you have to repay the debt, which was like something which was not reasonable at the time, because you look back, I don't know, like the term of 1 year, it's not going to work. So the risky part and the way you leverage. Of course, if you leverage by just giving your shares and historically, and then the market's paying, it's going to work. It's going to work until when? Nobody knows. It works until you are able to deliver and dilute a bit, not too much the shareholders, but they can see that your valuation is probably like the time of your bitcoins because in the future you're going to buy more. So it's really it's difficult, I think, for a lot of people to look at this and say, okay, yes, this will cover to and that, and loan of BTC, buy and buy for, and then it's risky around. But the reality is like those who can be will be the tool that will raise the BTC of the future, but also we can run to ashes some of the games.
Cool answer last. Like, there's a lot to say. Hopefully, I'll keep it short. Okay, so what is a Bitcoin treasury company? Let's say it's a protocol strategy, right? The way I see it, if we go back to that fundamental thesis that wealth is migrating from the current fiat system into the Bitcoin network, then what they're effectively doing is they are facilitating transfer migration of that capital from certain capital pools in fiat into Bitcoin. And yes, they capital participants, smart participants could do that through self-custody. They could do it also through ETF. But this is a mechanism that works through having better leverage than what individuals can typically get. So Michael said, for example, is saying 0% debt. So basically, you're getting free money to buy Bitcoin, right? And like sailors using preferred stocks, so it's also reducing the chance of default by being able to make sure it's not end issues to actually end issues. But it's not those too deep into the tools, so that's a bit of a rabbit hole. So we don't need every company in the world to provide this, but we do need at least one in each jurisdiction. There is demand for it. When I say need, there's demand from the market for this because each jurisdiction's regulatory tax implications are different, right? So there will be a certain supply requirements of this service. But yes, not every company should do it, nor is it needed every company do it. That doesn't mean, however, that not every company should embrace Bitcoin in the way that's right for them, given their circumstances, the industry they're in, their balance sheet, the risks they're trying to manage as they move through this transition. Is there a risk that certain companies do take on a responsible leverage and mobility? Yes, we will see many of these companies do it. Will they be holding a lot of Bitcoin? I don't think so. That tends to be the smaller companies that don't want to be enormous, not big ones. Where I think when those companies go belly out, I think those Bitcoin get soaked up by the bigger, better capitalized businesses. Where I actually see the biggest risk in this whole space, last one event, and I think more and more I was talking about this, will governments, mainly in the US, acquire the Bitcoins through these companies, right? So if you look at the US, they have a bill in Congress right now, they want to increase 1 million Bitcoin. Currently just sitting on about 120,000 confiscated Bitcoin.
yes, they could go to the market and buy it, but that's a huge signal, and they're going to drive the market price up, and it'll kill the US dollar in that process. Or they can go to a sailor and say, listen, those Bitcoin are ours now. Here's some US dollars, right? You get your money back, you get investors off. But I think that's the more likely outcome than a black swan that we're doing through. And they're going to, of course, need that custody and hold to different things that diverse. So I do think there is some black swan lurking there in Bitcoin Treasury space. Something is probably going to blow up. But at least what I'm doing right now, it's not like the sailors, irresponsible leverage. That's the bigger risk right now. I probably had 200 pounds for that.
Why do you see this approach that the US government would go to, especially like the sailors company, and say, okay, buy your Bitcoin? Why especially going for this approach? Why do you?
Yeah, I mean, I think it's because they can get now 630,000 Bitcoin, they get very close to the target in one transaction. So it's something where you're not doing it over a long period of time, where you need to let your cards be shown that other people can respond, but they can do it almost immediately. Plus, MicroStrategy is a U.S. entity. There's laws they have to come to. And I think when you look at the Trump administration, they're becoming more and more state capitalists at times, right? They're taking shares in companies. They're similarly wanting more of that. So I don't think, of course, this is a controversial perspective. I don't think it's necessarily on that 100% likelihood, but I definitely look at the signals it's moving in that direction. So I have to suggest that would be the most rational thing for them to do if they do want to recognize the Bitcoin's potential and want to implement it.
I mean, they did announce that they're not going to sell the seized Bitcoin they own, and they're going to buy more. But this approach is like, for the first time, I'm hearing interesting. Anyway, so when you go back to the ETFs, I mean, Bitcoin ETF was launched early 2024, and it was the most successful ETF launch ever in history, especially from BlackRock, right? Now, also Ethereum ETF was launched, but it didn't really get that hype. More than 90 more ETF applications are filed and waiting for approval from the SEC. How do you see the approach buying Bitcoin through an ETF rather than just buying Bitcoin and holding it on your own wallet? I mean, we do from the one hand, of course, for institutionals and also their regulations, and it's much more like they buy rather through ETFs through their brokerage rather than getting the risk exposed to being having Bitcoin on the wallet. But how do you see this approach of does it democratize Bitcoin and bring it to the global audience more, or will it just be another Wall Street product they are selling? What's first?
Start. Okay, I think I already said that it's a Wall Street product. If you look at the tools we have with the blockchain and the way you can have with the self-custody, your value, some of your value, I mean, it's super cool. All libertarians says it's going to change the world. I hope so. But the reality is like, we need to facilitate. For example, people mention stablecoin, say stablecoin is something, super great, it's new, but actually most of the crypto sphere was totally disconnected to the fiat networks. So crypto exchange were struggling to get banks accounts. So when you see these disconnections, you have to do in between. So the disconnection, which I think it's confusion. So I'm working for this synergy to work, and a lot of people are working on it. But the banks are refusing the crypto. If you do crypto with your bank account, they're gonna ban you like a few years back. So now it changed. It changed because they know that they have the tool in between. They can come and market something which is simpler for most of the people. So I think they just grinding a bit on the market. My valuation is pretty dark on the ETF side. It's good for the liquidity. It's good for version path of the Bitcoin. But as mentioned there, like people are looking, okay, we want more Bitcoins. The states want Bitcoin, the banks want Bitcoin. They're still strong. So maybe in the future, companies will be stronger than state. It's already happening. Or maybe states will succeed to be stronger than companies. So that's why I think is on, and the ETF is a tool in this way. That's the way I think.
I mean, to look from a pragmatic perspective, before we had the ETF, you had mining companies, basically the shares of a kind of a proxy. And as a vehicle, and it wasn't really that difficult vehicle for institutions to invest into Bitcoin. Now you have ETFs, and I just think, as I mentioned, it's a stepping stone. I don't think this will be the vehicle that businesses use for like in 10 years. You now have PAGs, right, and not just for Bitcoin, but for all these other crypto assets. Everybody's just trying to get institutional exposure, and it's just because there's this big inefficiency between the fiat world institutions and crypto native applications. But that's closing pretty quickly. I mean, at the speed at which people have started to innovate since we got this regulatory green light from the US essentially, and now also the legislations that they want to move into the space. I'm not sure how much interest there will be in the future to have like 50 different ETFs. It will just buy out liquidity, and once the problem right now is just opening custodians, right? Bitcoin is in Anchorage, and there's more companies trying to apply for these licenses, and whether they'll get them is obviously a big question, because I don't know if there's interest to have like 50 custodians that can accept these deposits. But it's just a matter of time, I think, until there's so many players in the market that businesses start just using backable solutions and acquiring BC themselves.
I absolutely see the case for ETFs, and most of it because we're still early in the market. Even if we're looking around, there's still a small group. And I need to regulate with a group of entrepreneurs for dinner, and we have a very nice class about politics, about anything, economy and investments. And I would say half of it are invested in some cryptos, and half of it they're still are not investing. And if you're not to them, it's still like, it's kind of shaggy, I don't know how, my bank doesn't have it. So there's a huge market out there of wealthy people who will not go directly and buy Bitcoin for their own wallet. And it's even problematic then for hereditary reasons, it's for regulatory reasons sometimes. Still, if you have it as an ETF, you can collateralize it on your bank account and so on. So there are a lot of people out there who an ETF, for whom an ETF is their best solution.
Yeah, I tend to agree with Marco here. And then I like where Leslie's going with the visionary, long-term plan, but I definitely see it more than 10 or 20 years out. I think as long as there's, the accessibility and user-friendliness aspect, and especially with self-fuzzy, there's a lot of sort of risk motivating what I'm comfortable with. And then I would say also, the first time I had ETFs because some of my money is regulated in accounts, accounts where I can't take that capital, put it up in Bitcoin. So there's a lot of, structures in place and restrictions beyond just the accessibility that will ensure these products are preferential for certain people riding a long time. So I'd say like 40 or 50 or something until we really get to the point where all source capital or investors are self-custody or using the institutional ones.
And what kind of companies do you see best positions to adopt and acquire Bitcoin and use it as a treasury?
So this is where I focus my attention, is helping businesses understand the opportunity that Bitcoin brings to their specific businesses. And I think we talked at length about the Bitcoin treasury company that Strategy is doing, that I think just brought a really great vision of the future where we move to a Bitcoin standard, where we need to have these kind of Bitcoin banks. And I think fintech companies, blockchain companies are well positioned to take that mantle. So I think that's a really exciting space. But where I see the most actually in the long tail of companies that will adopt Bitcoin in their own unique ways. Just bring some case examples out. I did a report looking at junior mining companies. There's 4 that were announced this summer. They're adopting Bitcoin as an asset on their balance sheet. Running into regulatory hurdles, delays, a lot of uncertainties. Having a strong reserve asset that will continue to increase value with time sets them up to be more resilient in the face of these types of risks. Another steady space is real estate, for example, where we do see this potential risk for real estate becomes demonetized over time, and some of that capital is gold and Bitcoin. So, and really interesting structures out there. So I think this is, in my mind, it's almost every business that use Bitcoin in some way, but it's really about them understanding their particular circumstances and coming up with the unique proportions and methods that match them. So it's kind of let's have a non-answer with an answer, but I think that's an exciting space to explore.
Again, I think many aware of using Bitcoin and making strong on the balance sheet is one key model. So then we mentioned inflation, so that's also tool to fight inflation and to be resilient to inflation. I think is the most important if you are going. And then after taking the risk of these assets carefully in the company. So it's for sure like if you are heavily connected to Bitcoin ecosystem because of your business or crypto ecosystem because of your business, you're going to be more likely to buy Bitcoins, and I think it's going to be a good move. For other kind of business, maybe they're going to use a true ETF investment because they think, okay, I can use this account because of the taxes as well. We didn't mention taxes, but the use of ETF is also because the way it is taxes in each jurisdiction. So yeah, we'll see. But I think the adoption of Bitcoin as an asset for companies will be the same that personals. And the biggest shift is how people are paid in crypto or not. I think will change a lot. So here in some industries, people be paid in stablecoin. If they shift to the bank in stable and not stable, then the company will need this asset, underlying asset. We'll see. Not sure if that happen, but it's happening for small companies specific. So we'll see. Mostly when they want to be not taken by the state, or they go to third country, or maybe I don't know, in the streets and place where you are being regulated, or you don't want the people to be seen by. Yeah, that's the reality. So.
Yeah, because you come from payments, right? And the most and biggest success story of blockchain is stablecoins, right? The transaction here, the volume, I don't know about how now, right? It's huge, and it's just so much easier to transact these stablecoins rather than sending a Bitcoin through traditional banking system. How do you see that evolving, and so where do you see this heading coming from the payment industry?
So from the payment industry, as I mentioned, when you mention like transaction, of course it is great, but if you look at centralized system, Visa, Mastercard, you get also information pretty fast. So this is something bad to say, but that's the reality. So the technicity of the stablecoin or the fiat system is not the point here. The point is like why people are using the stablecoins. So mainly they're using the stablecoins because they don't want to go into the fiat and economic sphere. Maybe because they were not allowed to go in the fiat sphere in the first place. So the emergence of the stablecoin is just something that is happening because it has to happen, which is fair. Actually, people want to stay in the crypto sphere, so they stay in the crypto sphere. And no state can do anything about that, and that's something pretty new. So I'm pretty enthusiastic about the stablecoin being the thing of mining, because we will be able to be exposed to much volatility. So we want something stable. That is still backed by US or a bit for Europe. So the stability of it is like somehow not really the case if you look at inflation. So that's why stablecoin is just the tool in between. Because of the taxes, because of the regulation, because of the industries not helping make connections in between fiat and crypto. For me, that's the tool. And this tool might be a super tool in the future for payments. Maybe Lightning will be a super tool. I don't know. For the future, I don't know which tool will be nice. What I'm pretty sure is that the next technology will be faster than the previous technology. So whatever the technology is stablecoin or not, it does not really affect. I mean, the way people transact, the people transact can be faster. So the payment industry is just choosing the tool which people use. If people have stablecoin, then build payment system on top of stablecoin. If they have a lot of bitcoins, we're gonna build payment system on top of bitcoins. This is a reserve and the share of the value which dictates what payment services will do in the future.
I honestly don't think that we'll see Lightning or Bitcoin getting stable out there anytime soon. And the reason is that people have access to the dollar, they want access to stable coins. Perhaps in the future where we have bigger issues, to be fair, than dealing with passive use, maybe that people switch to Bitcoin. But honestly, improving the infrastructure, it's just not there. Lightning, in my opinion, has failed to actually make that market have now smart trying to move in. But also we're up against, these new blockchains that are being launched by all the big stablecoin issuers. And they're actually expanding into all other ledgers just to see which one is going to be the one where, people we can use the infrastructure to handle payments. I think for the end user, it's actually pretty relevant where, which piece of the business model works. So I'm actually seeing the stable coins themselves are just an easier way to access the dollar. Maybe in the future, the euro open regulations in Europe have made that very, very difficult on chain and basically take part in these new financial products. And the composability of these things, you see more institutions kind of issuing assets on chain. But the infrastructure, which which blockchain is actually going to be used, I think that's a very open question. And there's a high chance that it might be then Ethereum because that's the one that's neutral. And if Strike and now Circle and Tether, they will launch their own blockchains that are not really interoperable. Well, then it's just going to become very, very usable. And you'll end up with people kind of converging towards something that's neutral, and they will always be on Ethereum. So I just kind of jumping. I don't think I think we're more on track to stay the same points. I don't think Bitcoin's going to be banks anytime soon. People don't view it as a payment asset. Stablecoins that are totally one in this kind of.
Yeah, I totally agree. I was saying that the underlying asset is Bitcoin as a code because you don't transact in gold.
It's collateral.
Yeah, it's okay. So it's going to be the collateral to the banks. So it's the same. So on top, it's not I mentioned Lightning just because it's very simple for people to know, okay, layer 2, but in layer 2, it's another blockchain. Yes. It's just another blockchain. So you would layer on top, but the underlying asset is Bitcoin. It's not going to move, Bitcoin doesn't move. Your gold in the safe is not going to move, but the dollar is going to move. So which blockchain, that's what I mentioned, we don't really know. If the payment industry will use Bitcoin as a payment system, I don't think so, and I don't hope so, because it's pretty slow, actually. So it's just, I was just mentioning, we don't really know which blockchains emerge, which one will be the one used. But the more important is the underlying asset. And you're mentioning that. So the story you're mentioning is actually already happened. We have a super system, technological system, which allow us to do instant transfer of money within euro. SEPA. So to build that, it took years because they have those systems in all the banks. So and they have to do the regulation. Say, guys, you're going to do instant payment in October, will be 25. It's going to be for everyone. And it took years because everybody was building its own blockchain on database later. And then after the Europe said, okay, you need to connect that, guys. You need to buy banks. It's going to be one system. Okay? And you don't have the big system, so you SWIFT system to get the big. So the story was already there for the banks, for the connection of the payments. The trend is to connect the payment and to make transaction. As I mentioned before, I mean, people wants to converse, wants to transfer, it's not going to change. the layer of technology that you here, we have to figure out to be it as an entrepreneur. But we'll see the future. But for sure, what we're talking here is like, what is the underlying assets? I see it currently replacing gold, so I think it's like so it's like,
Yeah, going back to the topic, also we discussed companies using Bitcoin as a digital. How do you see this for governments? Which governments do you see next? Like El Salvador, using Bitcoin or maybe some other currencies. As the main currency, as an investment vehicle, as a hedge against inflation. How do you see this shift going ahead? Which countries do you see adopting Bitcoin next, and what are the pros and cons of it?
not friends.
I think the question is like, what do you mean by adopting like this as a ledger, as a means of payment, and official kind of currency? I think that's going to take a long time because it means today that your national currency is not working. So if you look at, we generally look at, probably if you look at the global scale, we start thinking about the BRICS states. But I think there might be interest there to, build up reserves, but not actually at the currency level. I don't as a politician, but it's just, the way it looks, like El Salvador clearly is an example where, the economy was in a bad state. Maybe other Latin countries where the access to the dollars is very difficult, they might have been inclined. But now with the original stablecoin, the demand for that is actually quite low. So if we're talking about reserves, I think, I think some stuff to the States, there's more countries kind of joining that. And we might even see that as like the public, where, you have companies in these countries that just take back the public. But I don't think, we'll see China publicly announcing that they're now starting to buy Bitcoin as a treasury. They'll probably do behind closed doors. Them introducing that as a currency, I think that would just, I think, speak very much against their own national currency. I'm not sure if there's people who are much more into politics, but yeah.
I'm of the same opinion. As I've already showed in my presentation, I really don't see Bitcoin as a unit of account. But unit of account is the basis for our accounting, is the basis for the calculation of taxes, is the basis for insurance and retirement plans from the government, etc. So basically, stablecoins, as you already said, if we have some kind of crypto, in this case it will be stablecoins because it's tied to the unit of account. Bitcoin is completely something else, and I see it not as a currency for a long time, not as a currency. And about store of value, can we come back to this kind of treasuries, sovereign wealth funds, etc. And I'm pretty sure that more countries are already involved into Bitcoin, and they publicly tell us, like Russia, China, or whatever. Sometimes even they say at the beginning they're against Bitcoin. And I guess because usually there are small people all over, so they will have also their diversification.
So I think you mentioned stablecoin. So we have in Europe the same. It's not the same initiative, but the digital euro. So it gives you an answer. It's actually not the stablecoin. It's supposed to be decentralized. So the answer of the states, when they already have the power, is to say, okay, we want to do the stable. So it means that I think Marco is right in saying, okay, they're not going to go a lot on the BTC. But I see changes because, maybe Trump initiates because the guy is a businessman first. So he initiates something in the state. So if the state has leaders which act a bit like a businessman because they are entrepreneur or they are this spirit, I don't know about politics if it's right or not. Just saying that the spirit of the leader. Like the last year, we had like actors. We had actors becoming coming leaders. So it can shift quickly. We see that the state can shift quickly. We have China that banned that. I see that maybe we might be out of surprise with China. I know they banned Bitcoin probably because a lot of Bitcoin mining computer was paid by the government, was probably paid for by corruption for plans to install computer for the offices. That it was not office, it was just mining. And they said, oh, how many guys do you have? Oh, we have 1,000 computer for 2 guys. Okay, they need the real power. So I guess it's not that because there was too many money flowing out. They were just fighting corruption. Not saying they do good things in general, but for that was for corruption, I guess. But I think they might follow the lead of the state in that, and if the state is buying Bitcoin, if the state is taking over strategy or buying it back, we don't know. See, if some state just sees all the distributor company, hopefully not in France, then maybe some other step to follow, and then it might be the search for gold. We'll see.
Yeah, I agree with the panel in the sense that it's government's involved from the sort of value perspective. I think the benefits for payments is minuscule in most cases, so it's not really providing much. And if you look at the problem states have, it tends to be such a double the debt that it accumulated, right? And as you know, Senator Wyoming, Cynthia Lewis talked about, if the U.S. states the Bitcoin Act bill, if they can accumulate $1 million Bitcoin, they can actually get rid of half of their debt over the course of 25 years, I believe, assuming they don't sell that Bitcoin, right? And again, it's the underlying thesis that we're going through a wealth migration from one system to the other. So my view is, as state actors begin to, again, wake up to this fact, this is what's going on, there is going to be a desire for them to accumulate Bitcoin. If you asked me a year ago the same question, I would have said, countries like El Salvador, they're the little to lose and a lot to gain, right? They don't have their own currency, they've already been dollarized, they've given up their monetary sovereignty, so what else did they lose when we moved to Bitcoin? Then Trump came in and Bitcoin Act and deregulation. I think this is a signal that they recognize that there's a strong likelihood that there will be this move towards Bitcoin, and they want to position themselves to have as much as possible, because with wealth comes power. Right? If you go back pre-fiat days, it was sovereigns that had gold bars in their vaults, in their banks, that could exert more power over other sovereigns. Bitcoin is going to play that role for as long as nation states continue to exist as political structures. So there will be this Samson mouse at this game theory that plays out, where once a power like the US makes their signal, other countries will move. I also agree with the panel who mentioned that there are unannounced governments already accumulating. The Middle East, I think, is a prime example. China and Russia, I think, are probably not far off as well. So that race hasn't kicked off in earnest yet, but I think it will be a matter of time until it really comes to the forefront. So, yeah.
Yeah, if I may add on to this as well. So I completely agree. So governments will add it as a source of like investment, treasury, but as a source of payment because of the volatile nature, it's just not the right. And also, El Salvador actually has moved away from Bitcoin standard. So now, for 2 reasons. First, they got a big investment, and this was one of the requirements. And second, it has even not worked. They had the US dollar, and then also merchants had to accept Bitcoin, and not every merchant was even able, they didn't understand. So there were a lot of Bitcoin maxis traveling there, trying to explain them how to accept Bitcoin. But now they can still accept Bitcoin, of course, everyone, but they don't have to anymore. So in that note, this was, everyone wants to go to lunch anyway. I have 1 or 2 more questions from the audience if somebody has something, has a question.
Thank you. My question is, there are rumors, or it's even true already, that the stablecoin issuers have to buy US Treasuries. And some people claim already that the US is trying to move all their, the debt into stablecoins. So they want to make the stablecoin issuers to buy more US debt. And is there any, especially for Marco's question, is there any connection to debasement in the midterm when we have this, when they try to switch that?
I just heard the rumors. I don't have any other information. But of course, if you look at US Tether or whatever, they already bought US Treasuries. They only bought Treasury bills. So most of their balance sheet was already in US debt. And then to some extent, they also have some other investments. And for US Tether, it was a good thing because they didn't pay interest and they made a lot of money. They just added to stabilize the US Tether, the inherent value, and they earned a lot of money on it because they kept the interest. So it has a logic per se that if you have a stable coin, you should buy the underlying money for being in accordance with the value. So this part basically was anyway, and then the other part is that as it seems, US politics wants to have even more, it's just a new customer for their US debt. Instead of, as I showed, that just the Fed is fine with that. They need new customers because basically China is reducing US exposure. Russia anyway, they also have, and a lot of other countries also are reducing US exposure because they have seen what happened to Russia 3 years ago. So yeah, it makes sense for US politics, but I don't know if it really changes a lot. Because it doesn't make sense that they have to pay, if you have a euro stablecoin, it wouldn't make sense to buy US treasuries.
I agree with Marco, and I see this kind of thing come out over the internet just in the last year or two, and I think you have a question, right? Basically saying, US is trying to screw everybody, they're going to use stablecoins as the thing, right? And I think there's a remarkable thing. You see, the stablecoins will go mainly to the one major economy in the developed world, the developing world, right? Where they are already reliant on US dollars because their local currencies are shit. So this is creating a new market demand for US dollars, and I'm with exactly Marco, right? Because the issuers hold US treasuries because they need to back the stablecoin to something, and they might as well make interest on it instead of having US dollars. Then they use the interest to buy Bitcoin in Tether's case, which is great. So I think it's a win-win for the government. They have another buyer, and as you said, a lot of people are trying to offload treasuries, so they're happy if somebody's willing to buy the US dollar and get the US dollar all over the world. But I think the reason Russia's trying to make a bigger deal out of this is because they're trying to make the BRICS currency, they're trying to scare people out of the US dollar, especially those in the developing countries that are going to be the buyers of those future stablecoins. So I think it's blown quite a bit out of proportion in terms of what's kind of on the internet right now.
Maybe I could add a little thing. I think it's more like the other way around. Maybe why is the US government now much more pro-stablecoins than before? They fighted against US Tether for many years and other stablecoins. And I think this is more like the point. It's not that they're forcing some like the stablecoin issuer to buy, because they would anyway do it. But they're seeing it now as a new market, because there are so many other buyers which can't go directly to US dollar, like US dollar bills, but they will buy US Tether and other stablecoins. So I think it's more this idea that regulatory authorities, Trump administration, I don't know, they have now really understood that this is such a huge market that can make up for the loss we have in other markets, like mainly other countries.
Yeah, and again, it's like the crypto world was somewhere, and then not connected to the real finance. So now it's everybody is saying, oh, I can have a USDT, scale, USDC. So it's suddenly you guys, oh, but I'm fine with it. It's backed by the US. So it's a new tool, and it's probably annoying for a lot of states. Or Europe, kind of here, say, okay, they believe they can just leverage on it. They take the technology and say, okay, so I'm going to force you guys to back this to our stuff, and then we're going to continue to be strong, because it was just not connected. It was just people saying for one. So you have one USD and you give back. As soon as they regulate it, they control it. So it's a new tool for them. So I think they just want it to work.
Sorry, Alex, I want to get to you, but go ahead. So I think the real winners in this is, this is Bolivia a few years ago, right? Coming into the border on a bus. And at the border on the Bolivia side, there's just tons of people willing to sell, buy US dollars. They're going to sell local currency, black market local currencies. But these people, they all have iPhones now, right? They all have iPhones, but it's Samsungs, right? So why would they line up at the border to try and buy US dollars when they can just go online and do it through an app, right? So these people are really benefiting, but the local leaders want to keep them constrained within their monetary system, so these are the people that kind of lose out and take it away. So I think it's actually really good system. That's a good soft spot. Yeah, that's the one on it.
Thank you very much. I just got the sign we have to head off here. So thank you very much for my amazing panelists. It was very insightful and we're officially allowed to go to lunch. Thank you. Hope to connect with everyone. We're going to be around.
That was great. Yeah, great discussion.